Hey, it's Michael Saul, but everybody calls me Tiny, so you can too. And this video is, we're close to a high in the market, plus a new stock to watch. This is for the week of May 8th, 2017. So, let's start off with the S&P 500, and I'm going to update my wave count. So, the ABC that I was looking for is now DED. Okay, I forgot the A in there, but it's dead. All right, so that's gone. I'm going to take these out, the ABC out here. And now this ABC is also dead, so I'm going to take that out as well. The reason being, is it has gone on now too long. The quote-unquote C wave, it's extended. And time-wise, it's lost its symmetrical reference. Yes, could it still be a C wave? Sure, but I'm looking at something different now. What is still possible as of right now, I'm recording this on Saturday the 6th. Yes, Saturday the 6th. So as of Friday the 5th, it'd be nice to have a calendar handy sometimes. So as of Friday the 5th, we have still not taken out the high from back in the beginning of March, which means technically this still could be a wave 2. 1 down, 2 up. Remember, wave 2s like to test the metal. They like to test the commitment of wave 1, of those that are active in wave 1. So it could go all the way up to the tippy top and still be okay, but I don't think it's going to be. And again, my Elliott wave skills are not masterful. I just like to watch to see impulsive waves and how they dissect into 5 and corrective into 3. This has a better chance of being a double top if it's going to reverse. I'm not saying it's going to. I do believe, though, we are very close to a high here in the market. As you know, if you've been watching my video for any amount of time, I have been saying that I believe we get a sell in May and go away event. I also said it's probably not going to happen May 1st or anything like that. It can happen that early, but usually it happens more towards the middle or even end of the month. I think we're ready to get one more pop-up here, and then I think that's going to be all she wrote. And if you dissect these waves a little more, if you're an Elliott wave person, you could see that this could be the end of a bigger move, whatever it is. To me, we have Trump's health care passed the Congress, his health care plan passed the Congress. They repealed Obamacare, and now it's up to the Senate, and more than likely the Senate is not going to pass it's not going to pull Obamacare off so quick. I think there's going to be more problems. I believe that while the geopolitical tensions, I think that's quote-unquote old news, which is kind of disrespectful to the people that live in those countries that have all that, continue to have all that stress in their life. But I think it's old news as far as Syria and what's going on with North Korea. And sure, it could all flame up at the drop of a hat. I'm not saying that it's done and, we're never going to hear from North Korea again or anything like that. But right now, it's certainly not putting it's not pulling the strings here in the market. Okay, the market, you could say maybe it's climbing the wall of worry. To me, the bears have just been wrong. Okay, the bears have just been wrong here. I am looking for a high sooner rather than later. However, I am not going to guess the exact day. I mean, it's the most ridiculous thing ever to try to guess the exact day when it happens. I need to see a pattern. And when I'm talking about a high in the market, let's get a couple of things clear, make sure I am crystal clear here with my thoughts. I do not think it is the high and that's it, and the bear market has begun and we're going into the greatest depression, recession, stagflation, deflation, whatever it is. Country is going to crumble and the dollar is going to lose all its value, or it's going to go crazy like what happened in Zimbabwe. I'm not calling for any of that. Okay, I'm looking to start a short-term top that leads to a decline that offsets the election rally. I still believe that is the target here, and I still believe it happens this year. I have no reason to change my mind based on what I am looking at, okay? Doesn't mean that I think it's time to pile in short, to bring the wheelbarrow of cash down to your local E-Trade office, or is it Scott Trade? I don't even know who has the offices anymore, and just pile into the short index funds, or the short ETFs if you want, the leveraged ETFs. No, not at all. I believe that the bulls are still in charge here, but I believe that the boat is going to leave the dock shortly. I don't even know if that analogy is appropriate, but I do believe that we can start watching for, I like to call the New York Salute, one of those big reversal candles up at a high, a big inverted hammer or something like that, to say, hey, you know what, that's it for now. We're going to go into either a consolidation or, I believe, a decline. Okay, but again, to be clear, I don't have a sell signal here. I do not have it. I do not think my count of 1 down and 2 up is going to hold. I think we're going to take out those highs, go to new highs. The market looks exhausted to me based on all the indicators that I'm reading. There are some pretty good divergences up here. Again, divergences will get cut up, run over, stomped on, flame-throwed. Well, I don't even know if flame-throwed? Okay, they'll get killed in a strong trend. So you can't sit here and say, oh, those divergences. I mean, there have been divergences a lot on the way up. And some of them worked out for nice little pullbacks, right? Little guys. And some of them just completely got run over. So it's not enough to fight this trend, to fight new highs. No reason to be a pioneer, right? Pioneers wind up with what? Arrows in their back. Wait for a reversal. Make sure you can qualify the trade. You can quantify the stop loss. You know what your risk is, and then look to enter if indeed you would like to participate on the downside. Nobody's saying you have to. Maybe you stand aside. Maybe you don't like to short or buy inverse ETFs, whatever it is. But my opinion is that it's going to be sooner rather than later. I still believe we get a sell in May and go away type of event. I think a lot of people have made money, especially since November, and I think that they're going to start locking in some gains. And again, the market stops going up for 2 reasons. The first reason is they're selling against it, but that's not the main reason. The main reason the market sags is lack of buying, and I believe that's going to happen. I believe that's going to dry up, and that's what's going to pull the market down. Okay? I also think there's going to be an event of some sort. I'm not calling for a terrorist act or anything like that. I just think that with all the stuff that's going on, there's just, and I know we climb the wall of worry and all that, but I just think that something comes out and it spooks the market enough to get a kind of Keystone Cops type of move to the door, and that's what also brings the market down. I'm not calling for a crash or anything like that. I actually shouldn't have said it the way I said it with the Keystone Cop, because that's kind of what a crash looks like, right? Everybody running for the exits. But while it may be something like that, it probably won't be as dramatic as that. But I do believe that we can start a decline sooner rather than later. Now, I've said that a million times, so you're sick of me saying it. Okay, just want to make sure I'm clear. Here's the NASDAQ. Looks like it wants to continue higher. Again, I don't think the NASDAQ's going to go by itself, so I think that if the NASDAQ does pop up, I think that high is coming soon. Here's the Dow, lagging compared to the S&P 500. Here's the Russell, also lagging, came off the high, pulled back. This is more in a bigger range. Here's the mid-caps, similar. All right, let's look at some sectors. Semiconductors. Looks like they're geared up. They may want to take a move here. Here's Clad Tanker. Will they come up and retest those highs? Here's Intel. Not looking as bad as it did, but still kind of sloppy. Here's ADI now. Here's NVIDIA. So NVIDIA is, so we can start drawing in these lines again. All right. Oops, there you go. Okay, so you got like NVIDIA like that. All right, what about the banks? Yeah, so the banks are sitting here right at the 50-day moving average. They're looking like they want to make a move. Bank of America looks just like the index. JP Morgan lagging a little bit. Citigroup leading a little bit, but just slightly on both of those, the lag and the lead. Here's Northern Trust coiled up here. Here's Zion consolidating. His Bank of New York. Oh, look at this. Yeah, this is really getting triangulating here. See what this wants to do. How about the brokers? You look at Goldman. So Goldman is sitting here on its 20 EMA. Not a lot going on here. There's earnings. It's a busy week for earnings, so we have to pay attention to that as well. Check the calendar. Yahoo really has done a nice job redoing that earnings calendar. I really like it. Here's Morgan Stanley sitting on the 50-day. But the XBD is showing better strength in both Goldman and Morgan. So how about Caterpillar, right, with the big push-up? This is what I mean by kind of like the New York salute here, right? Just like the middle finger, then the pullback down to the 20 EMA. Here's John Deere. John Deere looks like it wants to try to pop up above 114. Look at biotechs. Okay, so the biotechs continue to push up here. Let's see what they do. I mean, overall, if we squish down the chart here, you see it's in a bigger picture channel. And then, but on the short term, it did push out of this coil here. We look at this Labu. All right, so it's came up. It almost got to the high here. Then it came down here, and it's kind of consolidating. Now it's forming a wide sloppy range, but it should tighten up. So that is Labu. Let's look at some of the high-flying interweb names. Amazon, just a complete beast. I read a lot on Amazon this week. So 63% of U.S. households are Prime members. To put that in perspective, 49% of U.S. homes have a land phone line. Only less than half have a land phone line now, of course, with the predominance of cell phones. And 44% are gun owners. 44% of U.S. households are gun owners, but 63% are Prime members. They spend an average of $193 a month, as opposed to, I think, $138 a month for non-Prime members. Just absolutely insane. Bezos is the second richest man in the world, right under Billy. But wow, what a move here. Looks like this could be a flag. Watch it. I mean, I don't know, jumping in all the way up here. I don't know, but I mean, if the market's going to keep going, Amazon is looking like a leader. Looks like it wants to go to 1,000. Here's Alphabet, another one. Looks like it wants to head to 1,000. I mean, you have the little, it's not really a kings and queens, but you have the Friday down candle after the push and rejection Thursday, so maybe it's due for pullback. Here's Apple. Wow, just wants to get to 150 here. Nice and strong. Netflix. We talked about this consolidation, busted out here, see where this is going. But I mean, these stocks are nice and high flying here, and they're really, really strong. Tough to just jump in here on the short side. Tough to fade these, and of course that's why the Nasdaq is so freaking strong. All right, bonds still sloppy. Looks like they had a chance. They came out of here, then they started falling down. Now they're at the 50-day. Back in this area of this range, so who knows what they're doing. Oil got cracked. See if that'll come down to the August low. Remember, there's a seasonal high around the July 4th holiday. We're in May, so this is a couple of months ahead of this. Doesn't mean that we're done here. A lot of people are calling for the death of oil. Yeah, I don't know if that's the case here. And I'm not just talking about the seasonality of it. To me, we have to break down below the August 16 lows. And we have to do that with a bullet. And then I think we'll retest the February 16 lows down here. Gold. So gold is interesting. Yeah, so gold looked nice. It got over the 200-day. It looked like it was going to continue, and nope, now the other way. So we want to watch this here. Let's try to draw a trend line in. I don't think we'll be able to get one. I mean, here's based on Wednesday's low. I don't even know if this is a great trend line. Let me try to fix it up here. So here's the breakdown here. I think we should wait for a consolidation and then see which way we go from here. If we come up and kiss the trend line and then roll back over, or just continue down, perhaps head down to the March lows. All right, so again, let me recap. I believe that this 1 down, 2 up is not going to hold. We're more than likely going to go to new highs on the S&P 500, NASDAQ out in front leading, Russell lagging, Dow lagging, mid-caps lagging. I believe that we do go to new highs, but I believe a high for the short term, again, not calling the high that leads to a terrible crash or anything like that, just a short-term high is setting up sooner rather than later. So one stock that I want to talk about today, well, first we can go over blue from last week. Talked about blue and what happened with blue. It consolidated, it popped out Thursday, came back in Friday, so not much going on there. The stock I want to talk about today, okay, 1 second, I will be right back. Okay, there it is Ionis Pharmaceuticals, IONS. It reports on May 9th, but this is a beautiful pattern. It had a really nice bottom at a little soft landing, I call it, at the 200-day moving average. Nice little W pattern and a nice rip up here. Will it continue up? Very tough for me to hold all the earnings. I don't do it. So that's my rule, but you can watch for this and see what happens, see what the earnings reaction is. Look, if it moves big after earnings or after the report, then all right, then you pass, you go on to the next one. But if it doesn't and it consolidates, and maybe it doesn't stay in this pattern, maybe it forms something like this. Okay, whatever it does, you can still keep your eyes on this and see if it can get above 50 and head up to test this small double top up here. All right, any questions, as always, tiny@attackthemarkets.com. I'm going to go back to watching the highlights from the Berkshire Hathaway shareholder meeting. All great. Love Buffett talking about how hedge funds, the fees they charge are too much money. Meanwhile, when he was doing it, then he decided to do an insurance company. So instead of 2 and 20, he gets it all, right? Just amazing, right? I just don't get it. I mean, I hate being a Buffett hater. I'm not. It's just some things you read he says and other things you hear him say, right? So this isn't secondhand. This is him talking at the shareholder meeting. But I remember him talking, I believe, a few months ago and saying, hey, stock picking, it's no good. Just go in an index fund. And I'm like, really? Because your whole life was stock picking. Your whole fortune was amassed by stock picking. I mean, it's more like company picking, right, than stock picking. It's a little different. I'm not, believe me, a lot of respect for the man. It's just sometimes he says things, and I just shake my head and go, yeah, well, it's easy for you to say this stuff. You don't have to earn a living. You don't have to. You're done. If you don't make anything from here until you die, even if you lose a little bit from now until you die, you're still going to leave multi-billion-dollar whatever legacy, whatever it is, or tens of billions, whatever it is. Okay, so obviously, right, he can't get hit for 50% a clip. That's more than likely not going to get happy. He's not going to get hit 50% of his portfolio every year and then go broke. Right? That's not the point. So I don't know. I'm trying not to hate on him, but sometimes I just shake my head and go, yeah, I get it. He's a genius. It's great. You can learn a lot from him. You can learn a lot from watching him. But sometimes he says stuff that is just, yeah, do as I say, not as I do, or not as I did. Maybe now he doesn't do it, but not as I did. One of the other things, and I'm going off on a little rant here, but when he was talking about the hedge fund compensation, the compensation for hedge fund managers, he was talking about the two people in his office. They manage, $21 billion or whatever, and they get $1 million each. Plus, they're compensated on performance if they beat the S&P, and it's nowhere near 20%. Yeah, that's great. And you know what? These guys, some people, the first reaction to that would be like, wow, that's all they make? And it's really not a lot of money, right? When you think about it, managing $21 billion or whatever it is. But just think of how set up. I mean, they're millionaires now, obviously, if they're making $1 million a year, whatever, depending how long they've been doing it. Unless they just got out of college and they're making $1 million a year, they had no money, which is more than likely not the case. So they've made a few million doing this. They'll make money doing this, and then when it's over, right, when it's folded, when Warren passes on, or when they decide to leave, I mean, they're basically going to be able to write their ticket, and that's when they're going to make the money. Now, maybe they'll, stay with his edict and stay with the way his beliefs and not believe in it, or they may go for the money grab. I mean, can you imagine that the two managers of Buffett's portfolio, the Berkshire portfolio, whatever it is, are now opening their own hedge fund? You don't think people will swarm in with money? Anyway, again, tiny@attackthemarkets.com. I welcome your comments. Leave comments on the YouTube video if you want. I read them all and I leave them all, including even the haters. I will talk to you next week. Have a great trading week.